Hello traders, welcome to the channel. Are we in a relief rally of more market correction, or is this the beginning of the next bull market? Only time can tell. But if you stick around, I'll share with you the 10 stocks and ETFs I'm keeping an eye on. This is for educational purpose only. This is not any financial advice. So first off, let's take a look at the market. The SPY is my market. Um, so if you look at the daily chart, it looks like we have formed a small uptrend. And there is certainly a lot of resistance here at about 575 area. And then also, as you can see, this red line here is the 200 MA. We're right at the 200. So there is some resistance there, but looks maybe it will consolidate here and then decide where it want to go up or go down. And let's take a look at the weekly chart. The weekly chart, we take out that, you can see that the weekly longer term is in the uptrend, although it has pulled back, and for the past 2 3 weeks it has been flirting with the 50 MA on the weekly, but right now it looks like it looks like it finds support on 50 MA on the weekly. So, but let's look at the individual stocks. The first one I want to look at is BITO. This is the Bitcoin ETF. So this one has been beaten up pretty badly, and it has been in the downtrend, but recently it has broke through this downtrend and formed a short-term uptrend. So this is why I think Bitcoin still has a lot of potential, and the ETF is safer. It's not as gappy as the individual stocks. So this is one of the um, ETF I'm keeping an eye on. The next one I have is the Tesla 2X ETF. Tesla has also been came down pretty hard for the past uh, couple 2 3 months. But right now, if we zoom on this chart, you can see that it looks like it has formed a bottom, and then if you a bottom right over here, and then if you look to the right, to the left, you can see that delete this. You can see that this is also where it used to have a lot of price action. This is the area that used to have a lot of price action. So maybe it has found the bottom, and but right now it's not the time to get in because it has advanced so much in the past 3 days. What I'm doing right now with this ETF is that I'm waiting for it to pull back, and then maybe when it pulls back, well, if it pulls back to the trend line, and then somewhere here when it pulls back, then I can get in. Um, and if you look at the potential, this one here, if we get in somewhere here, and then the first target is to the 200 area, the $16 ish. That's a 40% gain. That's huge. Even if we don't get the 40%, we get half of that. That's still 20%. But again, we have to wait for a better entry. Right now is not the time to chase. So that's that one. The next one I have is TNA. TNA. This is also a ETF. Like the other two, it formed a short-term uptrend. Um, so ideally, the best entry is when it consolidates and pull back to the trend line. So if we get in from here, somewhere here in this area, um, let's see here, and then the first target is to get to this green bottom of this green candle here. That's about 14%. And then if it can do that, then maybe the next target is the 50 MA. It's about 18% gain, and then the risk is pretty minimum. I would say that maybe if you're conservative, you can use a little the the bottom of this two candle. It's about 2-3% risk for a potential 14-15% gain here on TNA. The next one I have is SOXL. This is the semiconductor ETF. This one also uh, has formed a small uptrend. So it came down and then formed somewhere here. It found support and then it went back up and then it pulled back, but then it formed a higher low. That's why I say that it has formed a small trend. So this one too um, is that if you can get in somewhere here when it pulls back, or you can get in right here when it break above this little top here, then the risk is about 2, 3, 4% when it pulls back to the trend line, and then the first target is the 50 MA, about 19%. So it doesn't look much on the chart, but when you pull the measurement, you can see that the risk reward ratio is pretty good on this one as well. The next one is ARM. This is a stock. So like the ETFs, the stock, as you can see that it has found support here near 110, and then it tried to go up, found some resistance, and pull back and found some support. It used 4 days to form this little bottom here, and then because of this lower high, I mean higher low, we had a short-term uptrend. So ideal entry point is when they consolidate to the trend or pull back to the trend, and then so when you get in somewhere in this area, the next target is the 50 MA. That's 14%, and then the risk is, I don't know, maybe 2%. So again, the risk reward ratio is pretty good on this one. The next one I'm looking at is ALAB. Same, same here. Short-term uptrend because we have this higher low here. This one though, you can see that it's gonna go against the 200 MA on the daily chart. So there's could be some resistance, but if we get in here, somewhere here in this small box area, the first target is to this area, about what is it, 80, 84, $84. That's 16% actually. So just looking at the chart, looking at the naked chart, it doesn't tell you, but it's actually 16%. And then if it can tackle that resistance area, then it will. Next target is the 50 MA. That's 20+% gain, and then the risk is about 2-3% risk. So again, good risk reward ratio there. The next one I'm looking at is PCG. PCG, this one has already um, formed a longer term uptrend. It has proven that it's stronger than the market in the shorter term because it has formed a bottom already and is was going up, made a higher high and a higher low, formed this trend. Now it is doing what it did before it's consolidate. It after it formed the higher low, it went up again and then found um, came to this resistance area near $17, and then what it did, it didn't came right back down, but it was making smaller candles, consolidating in this price area. So I think, well, the market doesn't care what I think, but I'm looking at the price action. If it keeps doing that or it breaks up, so for this stock, maybe the best thing to do is to wait for the price to break through this small box area here, and then we can get in. Let's see how much. If we use the top here, about 1720, and then go up. The target here, first target is to tackle this resistance area, about 1850 ish, and that's also the 200 MA. That's 7%. That doesn't look like a much, but if you are trading options, 7% on the stock will be double digit gain on the options. So that's that one. Next one is NNE. NNE is an energy stock. As you can see, it has formed a bottom already here, this low and this low here, and it's already going up, and it has already passed the 50 MA. So this short-term uptrend, the trend is pretty steep, I would say, but um, if we get in here, we can get in right away, I think. And if we get in here, the first target is probably here to the $43 ish area. Or we can come down here, maybe to this top, the $40 area. That's already 20% plus gain. And then the risk here, if you want to use the I need to lower these two candles low here. That's a little steep. That's over 6%. Um, but compared to the potential gain, it's still a good risk reward ratio. Next one, EIX. EIX, I'm actually in this one. I got in when it break through this area. So I was in the green, but today the candle came down. So I'm probably in break even territory. But this one has formed a uptrend, or maybe we can draw it another way. Uh, Use this low here, then go that way. So this one depends on what it does the next couple of days. If it keeps going down, then we don't want to get into it because that will break through the uptrend, break down through the uptrend, and so then there's no good for us. But if it decide to go back up, and maybe the best time is to wait till it break through the top area of this consolidation box here. Maybe when it break through 58, 90 ish, then we can get in, and then the first target will be somewhere here, the 64 price range. That's 8%. And then if we can get past that, maybe tackle the high of this red candle, that's 16%. And then if it can do that, then the area at the bottom of this area, $71 ish range. That's 20%, and then the risk is about 3-4%. So good risk reward ratio again here on this one. And then last but not least, AIG. This is a insurance company. So if we come to the weekly chart of this one, you can see that this one is actually at an all-time high, I believe. Well, not if we go back far back enough, but as probably can't see from this small chart, but it has been going up. See here, it was at the $11 range. Now it's at $83. So in the let's go back to the weekly for a second. So for the past 14, 15 years, it has been um, an uptrend. So, and right now, short term, it's clearly an uptrend. It's stronger than the market because it has made new high um, while the market was pulling back. So this one here, so um, clear uptrend, and then maybe this one we need to wait a little bit longer because maybe what they wanted to do is uh, to come back to trend. If not, then another way to enter this stock is when they break above this small consolidating area. If we do that, then let's say that when it go over 84.50, then the risk here is about probably use a little bit more, maybe 2%, 3% as the risk. Um, but if you buy into this one, though, one thing to consider is if you buy option, you probably want to give you more time because, as what I said, that maybe the stock wants to consolidate more to go closer to trend before it takes off either up or down. So if you are going to buy options, make sure you have enough time in the option for it to actually make a move. So that's all the 10 ETFs and stocks that I want to share with you. Hopefully, you'll find some value in this. Until next time, see you later.